Alright students, let's go ahead and now revise the chapter of types of duties. Everyone over here, types of duties, always remember, when you go ahead and do the valuation ka chapter, once you are done with the chapter of valuation, either the value will be transaction value or the value will be tariff value. Transaction value or tariff value, on that you have to go ahead and charge the custom duty, and the different types of custom duties which are being levied when you go ahead and import the goods or when you export the goods, it is known as export duty. In case of import, you go ahead and levy import duties which are there. There are a lot of types of duties. Let's go ahead and start understanding about them. The first duty which is there is, sir, basically they are going ahead and telling on the assessable value, or the tariff value or the value identified by the officer using valuation rule, whatever is the value is known as the transaction value or tariff value. Now on the transaction value or tariff value, the first duty which is being levied is the basic custom duty. Always remember one thing, basic custom duty is being levied because it is told under section number 12 of the Customs Act 2000, Custom Act section number 12. Custom Act section number 12 goes ahead and says that, sir, duties of custom will be levied on goods imported or exported from India. Now duties of custom which are there, they are going ahead and telling basically, sir, duties of custom means custom duty. Custom duty will be levied on import or export. That custom duty which is levied as per the Custom Tariff Act. So custom duty is levied on goods imported at the rate specified in the Custom Tariff Act. So when you go ahead and read the Custom Tariff Act section number 2 goes ahead and says the rate at which duty shall be levied on goods imported or exported is basically told in the first schedule and second schedule. So first schedule goes ahead and gives you import duty ka rate. Sir, in case of export duty ka rate is basically given by second schedule. Now, when you go ahead and charge basic custom duty as per the Custom Tariff Act, first schedule, they are going ahead and telling there will be two types of rates which are there, standard rate or preferential rate. Always remember one thing, if preferential rate is given, then you can go ahead and claim preferential rate, but for that you have to go ahead and claim. Section number 4 of the Custom Act goes ahead and says that levy of duty where standard rate and preferential rate both are given, you will be going ahead and levying at preferential rate, but subject to condition. Number 1, you have to go ahead and make a specific claim. When you are filing your bill of entry, you have to claim that preferential rate of duty should be levied on your goods. Secondly, sir, importer also claims that the goods are produced or manufactured in the country, that country only from where you can claim preferential rate of duty. Basically, it has been manufactured or produced in the preferential area. Thirdly, the origin of the goods shall be determined by the government in accordance with the rule. And fourthly, they are going in and telling the area also should be notified as a preferential area by the central government in the official gazette. Only then preferential rate of duty shall be given. Always remember one thing, you have gone ahead and found out the assessable value. On the assessable value, you have to go ahead and charge. First is the basic custom duty which is levied under section number 12 of the Custom Act at the rate which is told in the Custom Tariff Act. Custom Tariff Act ka first schedule goes ahead and gives you basic custom duty and preferential rate of duty. Basic custom duty is always charged, only preferential rate of duty is not there. But preferential rate of duty will be given to you only if you go ahead and make a specific claim. Secondly, you also claim that the goods are manufactured or produced in the specific area, basically preferential area. And thirdly, the origin of the goods, because you are telling it is from that country, government will go ahead and determine as per the rules which are made on this behalf. And the last one over here is the area should also be notified as a specific, basically preferential area. 4 conditions satisfied, then you will be getting preferential rate of duty, otherwise standard rate of duty will be applicable. Now once you go ahead and levy the preferential rate of duty or standard rate of duty, which is the basic custom duty. The next one over here is the protective duty. Protective duty is basically over here, everyone. Protective duty, section number 6 of the Custom Tariff Act goes ahead and talks about protective duty. What is the government? It is levied when? Levied by the central government on the recommendation of Tariff Commission, and it is levied to protect the interest of the domestic industry. So basically, if government goes ahead and says whatever rate is told in the tariff, they have gone ahead and fixed that rate as lower now government is realizing that the rate should be higher, then for the time being government will go ahead and levy the duty as protective duty. But actually it is because the basic custom duty was lower, it should have been higher, they go ahead and levy for the time being as protective duty, and for that they will go ahead and give one notification. When protective duty is imposed, it is always deemed that the protective duty was specified in the first schedule as the duty leviable on such goods. So in the first schedule it was written 10%, protective duty ka notification given, it will be deemed that actual duty on those goods was 20%, 10% basic custom duty, 10% will be levied as protective duty. Remember always, if notification is issued by the government going ahead and levying protective duty, and if the parliamentary session is going on, in that parliamentary session they have to go ahead and introduce a bill and make the amendment to the Custom Tariff Act. Basically they should go ahead and amend the rate which is told in the Custom Tariff Act. If parliamentary session is not there ongoing, the next parliamentary session a bill has to be introduced and the amendment should be done in the Custom Tariff Act. Sir, if they introduce the bill and the bill is not passed within 6 months in the parliament, then the notification imposing protective duty will cease to have effect. I hope everyone is clear. Chalo. Now, protective duty is imposed. Now, they are going ahead and telling duration of protective duty in section number 7. Section number 7 goes ahead and says protective duty shall be effective up to the date specified in the first schedule. It can be increased and decreased by the help of notification. Government, as and when government thinks fit, government can increase and decrease it also. In case of increase, approval from the parliament will always be required. Right, everyone? Please come back. Now, one more section is there, section number 8 and section number 8A. Basically, section number 8 and section number 8A is whatever government is going ahead and charging duty, the basic custom duty on any item. If government feels in an emergency, government has to immediately increase or decrease any import duty or export duty. Then government can use section number 8 and section number 8A ka power. It is just the emergency power with the government to increase or decrease the custom duty. Right, everyone? Not very important from exam point of view, but I've gone ahead and given two small paragraphs over here. Everyone, please come back. We went ahead and learned S-able value. On the S-able value, basic custom duty, standard rate or preferential rate of duty. Then we levy protective duty. Whenever protective duty is imposed, always remember one thing, you have to introduce the bill in the parliament, get it passed. Right, everyone? And you have to amend the Custom Tariff Act. Now, once the total has come over here, once the total has come, you will have to go ahead and levy what? CVD under section number 3.1. Everyone listen to me very carefully. What is CVD 3.1? CVD 3.1 is leviable on alcoholic liquor for human consumption, tobacco product and HP man, high speed diesel, petroleum crude, motor spirit, aviation, turbine fuel and natural gas, and it is levied at the rate of excise duty on like articles manufactured in India. As of now, there is GST, not many articles pay excise duties there, but whatever like item excise duty is there in India, if you go ahead and import, they are telling we will not charge excise duty, we will charge CVD 3.1 to counterbalance the effect of excise duty on the Indian goods. Imported goods pay they levy CVD 3.1. Right, everyone? Not very important from exam point of view. I have given a small paragraph. You can go ahead and read it at home. The next one over here is total will come. What is the total, everyone? A civil value, basic custom duty, protective duty, total came. On the total, you levied CVD 3.1. Basically, on those items in India on which excise duty is there, if you go ahead and import, how much excise duty is there, that much they are telling we levy CVD 3.1. CVD 3.1 on alcoholic liquor for human consumption, government goes ahead and notifies. Now the total will come over here. On the total, always remember one thing, not on the total, but on the whatever the duty is there, basic custom duty, protective duty and CVD 3.1, social welfare surcharge at the rate of 10% will be levied. Always remember one thing, social welfare surcharge is on CVD under 3.1, protective duty and basic custom duty. Social welfare surcharge which is there was introduced by the Finance Act 2018, section number 110. Social welfare surcharge is 10% on imported goods and only on imported goods and not levied on export. It is levied to fulfill the government commitment towards what? Towards finance, education and social security. Finance, education, health and social security, and it is levied. Only remember one thing, basic custom duty, protective duty and CVD 3.1 pay social welfare surcharge will be levied at the rate of 10%, not levied on export, only levied on import. Right, everyone? Now the total will come over here. After you levy basic social welfare surcharge, one total will come. Yes, everyone? On this total, you have to go ahead and levy CVD 35. What is section number 35 ka CVD, everyone? 35 ka CVD. Earlier, on Indian goods, VAT and sales tax was there. Now, on imported goods also, they are going ahead and telling earlier, VAT and sales tax should be charged, but in the name, they had gone ahead and named it as CVD 35. It was to counterbalance the effect of VAT and sales tax on Indian goods. They went ahead and introduced CVD 35, but now on Indian goods, VAT and sales tax is not there, and hence the extent of applicability of CVD 35 is only limited to one item, which is what? HP man, and it is levied at the rate of maximum 4%. High-speed diesel, petroleum crude, motor spirit, aviation turbine fuel, and natural gas pay 4%. CVD 35 is being installed. Not installed, implemented, basically charged. Now the total will be over here. Now on this total, you go ahead and levy safeguard duty under section number 8B of the Custom Tariff Act. Everyone over here, when you come below safeguard measure, section number 8B goes ahead and tells central government, power of the central government to apply what? Safeguard measure. Now first of all, when will safeguard measure be charged? Whenever government goes ahead and sees, everyone, circumstances for which safeguard measures, not duty, safeguard measures will be imposed are if central government, after conducting an inquiry as it deems fit, is satisfied that any article is imported into India in increased quantity is coming into India, and that is going ahead and causing what? Causing or threatening to cause serious injury to the domestic industry. Always remember, causal link has to be established. What is the cause? The cause is increased quantity coming into India, and because of the increased quantity, what is happening over here? The injury is happening to the domestic industry. To protect the domestic industry, government will go ahead and say increased quantity we have to stop, and to stop that we will implement safeguard measures, right everyone? Then it may by notification apply safeguard measure to that article as it deemed fit. Basically injury margin, how much ever is the injury margin, that much safeguard duty is being charged. Sometimes instead of duty, they go ahead and implement other safeguard measures also. Objective of safeguard is to protect the domestic industry in aiming to make them more competitive. Increased quantity is coming from US to India. Indian domestic industry is telling, sir, the market is flooded. Because the market is flooded, the price is falling. Now the imported goods, they are able to survive, but we are not able to survive because our cost is only too much. Government asked why? Because sir, we are not competitive. We don't have good machinery. So government will give you some time to become more competitive by going ahead and implementing on the imported goods safeguard measures. Right, everyone? Sir, what are the modes of safeguard? Number one, government can go ahead and what are the different ways to safeguard? Government can impose safeguard duty. Government can impose tariff rate quota. So government will go ahead and take last 3 years ka import. Average will be taken and government will say this much is the quota. For up to this much, if goods are coming into India. So last, supposingly calculators were imported into India. Last 3 years ka data, statistics, whatever is, for whichever last 3 years statistics is available, they will take the average of that import. Now average of that import, government will go ahead and say that this much is the quota. If you get up to this much item, if this much calculators are coming into India, no rate of duty or low rate of duty. After this, safeguard measures will be implemented or safeguard duty will be charged, and that is known as application of tariff rate quota. One quota will be fixed. Up to that, they will go ahead and charge no safeguard duty or low safeguard duty. But once you exceed the quota, then safeguard duty will be charged. So government, what are the measures of safeguard? Number one, they can impose safeguard duty. Number two, application of tariff rate quota. Number three, such other measure as the central government may consider appropriate. Government will impose some restrictions, etc. Sir, what is the minimum level of tariff rate quota? Minimum level is last 3 years ka average. Average of last 3 years of import, basically average level of import in the last 3 representing year for which statistics are available. Sir, what is the exemption for safeguard measures? Everyone listen to me very carefully. Who are the people? Exemption from safeguard measures. So if an article is imported from outside India, from one developing nation, remember one developing nation, brother nation, we are developing, he is developing, brother, plus the import is not exceeding 3% of the import of that article into India, then no safeguard duty exemption will be given. Now, if article is coming from more than one developing country, 3 developing country for an example, then remember, sir, if it is for more than one developing country, then you have to see which country say it is less than 3. So, supposingly this country it is 4%, developing plus less than 3% and total should be up to 9. Remember, less than 3% and total should be up to 9. For an example, this country is developing but 4%. What will you do? No. Sir, this country less 2%, this country 2%. Take the total, it is only 4%. Both country ka import will be exempted. So they are telling article originating from developing country, so long as the share of that article does not exceed 3% of the total import of that article. Article is originating from more than one developing country. Then they are telling the aggregate of import with less than 3%, means all the countries with less than 3 and total should not be exceeding 9%, then all of them will be exempted. Remember, developing country less than 3, total up to 9. Then, sir, if import is made by SEZ or 100% export oriented unit, in that scenario also they are going ahead and telling we will not go ahead and impose safeguard measure. But if the EOU or the SEZ clears the goods into India or makes the goods and those goods are cleared into the domestic tariff area, in that case safeguard measures or safeguard duty will be imposed on those articles which were cleared into the domestic tariff area. Or if in the notification it is told that specifically that 100% EOU or SEZ importing also safeguard will be imposed, then safeguard duty will be applicable. Otherwise, safeguard duty is not applicable on EOU, 100% EOU or SEZ. Remember one thing, what are the exemptions given for safeguard measure? Number one developing country safe goods are coming and the share of import is up to 3%, no safeguard duty. More than one developing country, each with less than 3, up to 9 total, then no safeguard duty. And 100% EOU or SEZ if it is importing, then no safeguard duty. Sir, can provisional duty be imposed? Provisional duty, yes, government can go ahead and impose provisionally also. On finalization, whatever the difference is there, government will go ahead and refund. Maximum duration of provisional imposition is how much? 200 days. And sir, retrospectively not allowed. Maximum period of imposition 4 years and extendable up to what? 6 years. Total can be how much? 10 years. Now the next one over here, everyone listen to me very carefully. First, you will have to go ahead and take assessable value, basic custom duty, protective duty, total will come. On the total, you will go ahead and impose CVD under section number 3.1 and then the total will come. On that social welfare surcharge, then the total will come. CVD 3.5, then the total will come and then safeguard duty will be calculated. Safeguard duty is generally calculated on the assessable value under section number 3.1. Always, 14.1 or 2, 14.1 or 14.2 on that assessable value, basically safeguard duty will be calculated. Now what happens? Sometimes some government go ahead and give subsidy to their people to go ahead and export the goods to India. In that scenario, Indian government can go ahead and charge what? Anti-subsidy duty. It is known as CVD on subsidized article under section number 9. Let's go ahead and read this. Section number 9 over here says CVD on subsidized articles. So for an example, one country is going ahead and giving subsidy. Indian government will go ahead and give what? Charge anti-subsidy duty, which is also known as CVD on subsidized article. It is actually known as CVD on subsidized article. One country giving subsidy, Indian government charging anti-subsidy duty, which is CVD on subsidized article. So subsidy and injury, whichever is lower, will be charged at CVD on subsidized article. CVD is equal to amount notified that is lower of the subsidy or injury margin. Causal link, what is the cause? Subsidy. Because of the subsidy, what is happening in India? Injury. So sir, we will go ahead and charge anti-CVD on subsidized article. Sir, what is the maximum CVD? The amount of subsidy. The amount of subsidy can be the maximum CVD that can be charged. When it is deemed, when is it deemed that a subsidy is existing? There are financial contribution by the government or any public body within the territory of exporting country. What is happening? The person who is exporting, for an example, China say one person is exporting and that person is given some financial contribution by the government. Government is going ahead and supposingly there is a direct fund transfer which is given by the government. Might be government revenues which are there, government is not collecting and leaving it off, saying taxes will not collect from you, and government provides goods or service other than general infrastructure. It will be deemed that in this scenario government is trying to help the person by giving him subsidy so that he exports the goods to India, and Indian government will charge CVD on subsidized article. The next one over here is government grants or maintains any form of income or price support which directly or indirectly increases the export of any article into India. So if government is going ahead and maintaining any form of support or grant, then in that scenario also it will be deemed that there is a subsidy in that country and Indian government will charge what? CVD on subsidized article, which is subsidy or injury, whichever is lower. Everyone, what is the ways of circumvention? What are the ways of circumvention? That person was going ahead and sending supposedly calculator into India. Indian government will then told on calculators from today we'll go ahead and charge what? CVD on subsidized article. Then what will they do to circumvent in order to avoid the duty and make it ineffective? They will go ahead and try to circumvent. They will try to find out the route how they can make the duty useless or nil. Basically, they are trying to find out routes how they can make the CVD ineffective. And sir, what are the routes to make the CVD ineffective? Circumvention by altering the description or name or composition of the article on which duty is imposed, by import of such article in unassembled or disassembled form, by changing the country of origin, sending it to Dubai, and from Dubai sending it to India, or sir, by any other manner whereby the CVD so imposed is rendered ineffective. These are the ways of circumvention. If government sees that there is a circumvention, what will the government do? Investigation will be carried out by the central government and CVD will be imposed on such article from such date, not earlier than the date of initiation of the inquiry, as the central government may by notification in the official gazette specify. Sir, can there be an absorption? What happened over here? In India, we went ahead and charged 10 rupees as CVD on subsidized article. The exporter over there in the exporting country went ahead and told, okay, fine. In order to maintain the same price in India, what he did to the importer, he told, I will go ahead and reduce the price further by 10 rupees. It means he has gone ahead and absorbed the subsidy, which was CVD on subsidized article, which was charged in India. The exporter absorbed it. And that is known as absorption of CVD. Absorption of CVD, when central government went ahead and on inquiry is of the opinion that absorption has taken place, then making the CVD ineffective, it may by notification, it may modify such CVD to counter the effect of such absorption. Everyone over here in India, we went ahead and charged CVD on subsidized article as 10 rupees. The exporter from the other country went ahead and reduced the price by further 10 rupees. It means he is going ahead and doing absorption. In that scenario, whatever price he is reducing further, that much amount of CVD will be charged by the government further. Government is telling, if you are absorbing, we will go ahead and increase the duty, we will modify the duty which was already levied. Right, everyone? From such date, not earlier than the date of initiation of the inquiry, as the central government may by notification in the official gazette specify. Sir, when is it deemed that absorption has taken place? Baba, if there is an export price which has come down, India ka resale price also should be coming down, but there is no change. What is happening? Export price has come down, but India it is still selling at the same price. Then it is meant that absorption has taken place. Everyone over here, if there is a decrease in the export price of an article without commensurate change in the resale price in India of such article imported from the export country or the territory, or under such other circumstances as provided by the rules. When is it told that absorption has taken place? Supposingly India we went ahead and India the goods which is there is selling at 120. Now everyone over here, we went ahead and charged 10 rupees ka duty and he went ahead and reduced the 10 rupees. It means he is trying to do absorption. Export price came down. Indian price is not changing. India it was selling earlier also at the same price, now also at the same price. Then they are going ahead and telling there is an absorption which has taken place. Can I go ahead, everyone? The next one over here is provisional imposition. Is it possible? Yes, but on finalization, whatever the extra taken will be refunded. No CVD if you are going in and importing. Who is importing? 100% EOU. CVD on subsidized article will not come. 100% EOU is importing, or SEZ is going ahead and importing. But if they clear in the domestic tariff area or make goods and clear those goods in the domestic tariff area, then CVD on subsidized article will be imposed. Can retrospective imposition be there? Yes, sir, from a date prior to the date of imposition, but not 90 days from the date of notification. What is the duration, everyone? 5 years, further extendable up to 5 years, means extendable by 1, 2, 3, 4, 5. Right, everyone? The next over here is, if duty is under review on expiry, then it will continue to be levied for a further period of 1 year. Sir, can the duty be revoked temporarily? Yes, sir. 1 year at a time, temporary revocation of CVD on subsidized article can be done. Everyone over here. Now, what did we go ahead and learn? We went ahead and learned a civil value. On that basic custom duty will be charged. On the basic custom duty, productive duty, then total will come. CVD under section number 3.1. Total will come. Then social welfare surcharge. Total will come over here. Then CVD 3.5 and the total will come. On that, safeguard duty will be imposed. CVD on subsidized article will be imposed. And now is the anti-dumping duty. Everyone always remember one thing. If one country, one person is going ahead and dumping the goods into India, whatever is the dumping he is doing or the injury, whichever is lower, that much amount of anti-dumping duty will be imposed. Let's go ahead and see anti-dumping duty. You dump the goods into India, we will go ahead and protect our domestic industries by going ahead and charging anti-dumping duty. Always remember one thing, anti-dumping duty over here, section number 9A says anti-dumping duty. Dumping happens when article is exported from any country at a price at lesser than its normal value. Normal value is supposedly 100 and you exported at 50. What is the margin of dumping? 50 rupees is dumping. Everyone over here, sir, how do we calculate dumping? Always remember one thing. USA, supposedly one person is going ahead and sending the goods. Normal value means its cost plus profit, or the normal selling price in that country is 100, or might be he is going ahead and selling the goods to another third country at 100 rupees. What is normal selling price? Normal value means the normal selling price in that country, or he is going ahead and exporting in other country at 100 rupees, or might be his cost of production plus profit is 100 rupees and he went ahead and exported it to India. Export price is 50. What is the margin of dumping, everyone? Margin of dumping is 50. The goods have come to India over here. In the Indian port, the goods have come. I am going ahead and clearing, and 50 rupees plus basic custom duty, social welfare surcharge, it is costing me 61. In the India, normal selling price or the landed price, you will have to see. What is the landed price? Value, whatever is the import ka value, basic CIF value, basically the CIF plus basic custom duty plus the, okay, I will do one thing. I will go ahead and take the CIF little more because it was exported at 50. CIF might be 60. Basic custom duty might be 20 rupees and social welfare surcharge is supposedly 20 ka 2 rupees. How much it is? 82 rupees is the landed price. 82 rupees is the landed price. But sir, normal selling price in India is supposedly 100 rupees. How much is the injury? 18. So sir, here margin of dumping is 50. Injury margin is 18 rupees. Whichever is lower, 18 rupees, that much amount of what will be levied? Anti-dumping duty. Are we clear, everyone? Anti-dumping duty, how to calculate? Sir, whatever is the normal selling price in the, basically, that country may they are selling at 100 rupees supposedly, or cost plus profit is 100 rupees. He is exporting at 50. Difference is margin of dumping. In India, the goods have come. In India, normal selling price of those goods, fair selling price is 100. And sir, those goods have landed at 82. Whatever the differential is the injury margin. Always remember one thing, they will go ahead and charge anti-dumping duty, which is lower of margin of dumping or injury margin. Margin of dumping means normal value minus the export price, which I have written over here. Injury margin also has been written. Injury margin is what, everyone? Always remember, fair selling price minus the landed value of the dumped goods. Right, everyone? Sir, when is the date of commencement of anti-dumping duty? Always remember that when there is no provisional duty imposed, the date of publication of the notification imposing anti-dumping duty in the official gazette, the day it is told that anti-dumping duty will be charged and it is published, that notification is published in the official gazette, the date of publication of the notification is deemed as the date when anti-dumping duty will be effective. Sir, when provisional duty is imposed, the date of publication of the notification imposing provisional duty in the official gazette, when anti-dumping duty is imposed retrospectively from a date prior to the date of imposition of the duty provisionally, such prior date as may be notified in the notification imposing anti-dumping duty retrospectively. Sir, what is the date of commencement? The date of commencement will be such retrospective date, but not beyond 90 days. Right, everyone? From the date of such notification of provisional duty. Can I go ahead, everyone? The next one over here, sir, whatever we went ahead and learned in CVD for subsidized article, circumvention measure, absorption, right, everyone? All will apply over here also. Then Sir, no anti-dumping duty on articles imported by 100% EOU or SEZ unless specifically made applicable or it is used for manufacture of goods cleared in the domestic tariff area, or those goods are basically cleared in the domestic tariff area. Sir, provisional imposition, is it allowed? Yes, sir, pending determination. Refund will be given on final determination. No anti-dumping duty. This I have already gone ahead and told you that you can cut this line. I have already told you. Retrospective imposition, yes, sir, but not beyond 90 days. Duration 5 years plus extendable up to 5 years. So 5 years. 1, 2, 3, 4, 5. Again, if you want, you can further go ahead and charge for up to 5 years. Can I go ahead, everyone? If duty is under review on expiry, it will extend for 1 more year. Sir, if it can be revoked temporarily for a maximum period up to, means shall not exceed up to 1 year at a time. At a time, 1 year. Can I go ahead, everyone? Sir, refund of anti-dumping duty, supposingly, we are not talking about provisional refund. Provisional refund of anti-dumping duty is given under section number 9A. Section number 9AA says, supposingly, government went ahead and charged anti-dumping duty from an importer. Later, importer goes ahead and says, sir, what anti-dumping duty you are charging is 25 rupees, but actually margin of dumping is only 20 rupees. How can you charge more than the dumping? So, whatever is the extra amount that will be refunded by the government, that is told in section number 9AA. When importer goes ahead and proves to the government that, sir, whatever anti-dumping duty you are charging is in excess of the margin of dumping, then government will go ahead and refund the amount which was being charged excess. Right, everyone? Please go ahead and read this at your home. Now, sir, no levy under section number 9 or 9A. Section number 9B goes ahead and says there will be no levy of anti-dumping duty, so, or CVD on subsidized article when they are going ahead and telling both duties first of all cannot be levied together, and then duties cannot be levied for what reason? You can't go ahead and give this reason and charge CVD on subsidized article or anti-dumping duty. They are telling both duties cannot be levied for the reason that the same is exempted from duty borne on like article when meant for consumption in the country of origin, or by reason of refund of such duty. In the origin country might be a refund of duty is given, and you are telling it's a subsidy which is there, and I want to go ahead and charge CVD on subsidized article. No, you can't do. Might be the exporting country may refund of duty is given because exports pay refund of duties are given. You can't go ahead and call it subsidy, or you can't call it that they are going in and exporting to the country at a very lower price and anti-dumping duty will be charged or CVD on subsidized article will be charged. No, you can't do that. Then they are going in and telling if import is happening from a member of the World Trade Organization or most favored nation, you can't go ahead and charge CVD or anti-dumping duty unless you go ahead and determine what injury in the prescribed manner. Right, everyone? Please remember this point. They go ahead and ask sometime no levy under section number 9 or 9A, basically no levy of CVD or anti-CVD on subsidized article or anti-dumping duty if 3 points. Remember, both can be charged, both cannot be charged together. Then both duty cannot be levied because of the reason that the like article, the same is exempted from the duty, or by the reason that the refund of such duties are given in the origin country, or import of article, they are going ahead and telling if it is done from a member of the World Trade Organization or most favored nation, in that scenario you can't go ahead and levy anti-dumping duty or CVD on subsidized article unless you go ahead and determine the CVD or anti-dumping duty in the manner prescribed. Right, everyone? Everyone over here now. Sir, please come back. I went ahead and told you about safeguard, CVD and anti-dumping duty. The total value will come. Everyone listen to me very carefully. This total value is known as value under section number 38, and on the 38 ka value section number 37 mein what is levied? IGST. This value is also known as 310 ka value, and on the 310 ka value GST compensation cess is levied under section number 39. Always remember one thing, on Indian goods IGST is levied 18%, on imported goods also IGST will be levied at 18% under section number 37. CVD under section number 37. CVD under section number 37 is levied on the value under 38. Then we have if Indian goods pay IGST is there, imported goods also IGST under section number 37. Indian goods pay GST compensation cess, imported goods also GST compensation cess under section number 39 on the value under section number 310. Right, everyone? And you will get a total. Now I have gone ahead and told about 3.7 over here. 3.7 means IGST is levied on, IGST shall be levied on any article imported into India except alcoholic liquor for human consumption and HP man, because on that GST is also not there. So section number 3.7 mein IGST also will not come. Then at the rate not exceeding 40% on a like article on its supply in India. India में if like article पे 18% IGST is there, import पे also 3.7 में IGST at the rate of 18% will be charged on the value which is determined under section number 3.8 or section number 3.8a. 3.8a goes ahead and talks about bond to bond transfer. Always remember, in case of bond to bond transfer, please go ahead and take for levy of IGST or GST compensation cess. Remember always, when you are going ahead and calculating the value for the purpose of levy of IGST, you can take on bond to bond transfer. On bond to bond transfer, take 3.8 ka value or the transaction value whichever is higher. For the purpose of levy of IGST under section number 3.7, you can take 3.8 ka value or 3.8a ka value. 3.8a ka value says, sir, this value which is determined under section number 3.8 or the transaction value whichever is higher. Everyone also remember one thing, sir, GST compensation cess is also levied under section number 3.9 and it is levied in case of bond to bond transfer. If it is there, it will be levied on 3.10 ka value which is over here or transaction value whichever is higher. So 3.9 is also imposed on 3.10 ka value or the transaction value whichever is higher, and this is told under section number 3.10a. I hope everyone is clear. Always remember one thing, everyone. Generally 3.7 ka IGST is charged on 3.8 ka value, 3.9 ka GST compensation cess is charged on 3.10 ka value, and this is over here. But if it's a bond to bond transfer, in that scenario it is being told that IGST or GST compensation cess will be charged on 3.8 ka value or 3.10 ka value or the transaction value whichever is higher. Sir, if bond to bond transfer has happened for partial goods, then for partial goods you take the 3.8 ka value partially or the transaction value whichever is higher, and for the remaining goods which you are going to clear, please take 3.8 ka value and accordingly make the tax ka payment. The same thing has been told 3.7, 3.8, 3.9, 3.10 and 3.10a. Then we have trade agreement over here. In trade agreement, what is being told, everyone? They are going ahead and telling whenever Indian government and any other country ka government have a trade agreement and there is some rate which has been specified, then the rate as decided in the trade agreement will prevail over the Custom Tariff Act ka first schedule ka rate which is being told. That will not prevail. What is told in the trade agreement will prevail. Homework, everyone, you can read at home. Might be they go ahead and ask you a small question. Write a note on trade agreement. Everyone over here, sir, whenever any duty is being charged from me, can I go for an appeal? Always remember, Central Excise and Service Tax Tribunal which is there, you can go for an appeal within 90 days with a fees of 15,000. Social welfare surcharge I went ahead and told you. The next one over here is agriculture, infrastructure and development. Says government has gone ahead and told on specified products at specified rate. We will go ahead and basically on notified or specified goods at notified rate. Specified goods at notified rate, government will go ahead and charge, like kabli, chana, gold, etc. Government will go ahead and charge what? Agriculture, infrastructure and development cess. This cess will be used for financing the development of agriculture and development needs of agriculture basically. And then this cess is also in addition to other duties of custom. The cess AIDC is calculated on the value under section number 14, basically section number 14.1 ka value or 14.2 ka value, which is the transaction value or the tariff value. Right, everyone? Remember, for your exam purpose over here, this chapter is an A graded chapter. The flow is very important. You have to remember, first of all, take the transaction value or tariff value, add basic custom duty, which is standard rate or preferential rate. Then you have to add protective duty, total will come. On that, you have to go ahead and add CVD 3.1 on the value under section, on the value which is A point over here. The total pay, you will have to go ahead and charge, not on the total. Now, on the basic custom duty, protective duty and CVD under 3.1, you will charge social welfare surcharge at the rate of 10%. Then on the total, you will go ahead and charge what? CVD under section number 3.5, which is to compensate VAT or sales tax, 4% only on HP man. Now the total will come. Then you will have to go ahead and charge Safeguard duty. Safeguard duty is always on accessible value. Basically, they will tell you in the exam how to calculate. Remember, safeguard duty, then CVD on subsidized article and anti-dumping duty will be charged. Baba, always remember anti-dumping duty is 9A. Anti-dumping duty is under section number 9A, right everyone? Then the total will come over here. This total is known as 38 ka A, 38 ka total or 310 ka total. On 38 ka total, section number 37 my GST is charged. 310 ka total is the same. On that, GST compensation says under section number 39 is being charged over here, right everyone? Now you will get a total. In the exam, if they go ahead and ask you, please tell the total of the custom duty. Remember, basic custom duty, protective duty, CVD under section number 3.1, then social welfare surcharge, CVD 3.5, all this safeguard duty, CVD on subsidized article, anti-dumping duty, IGST and GST compensation says this is the duties of custom. One more thing which I went ahead and told you over here, please remember that sir, whenever it's a bond to bond transfer on 3.8 ka value or transaction value, we'll go ahead and charge whichever is higher, on that we'll go ahead and charge IGST. Under section number 3.8 it is told that 3.8 ka value or 3.8 ka value, 3.8 ka value or transaction value whichever is higher, that is told in section number 3.8A, that on that IGST will be charged. Sir, then we went ahead and learned 310 ka value or transaction value whichever is higher, on that GST compensation cess will be charged in case of bond to bond transfer. Also remember one thing, bond to bond transfer mein last transaction value you have to take. Last transaction has to be taken. Last transaction value if it is a multiple sale which is there, right everyone? Sir, if it's a partial sale, partial was bond to bond, partial was normal. For normal 3.8 ka value, for bond to bond transfer, partial amount of 3.8 ka value and transaction value whichever is higher. I hope everyone is clear till here. Listen to me very carefully. Everyone over here now. We are done with the chapter. Listen to me very carefully. You have to remember one thing. This flow is very important. It's an A graded chapter everyone. 4 to 6 marks you can expect. This flow is very important for exam. Secondly, you should remember section number 3.7. You should remember section number 3.8. 3.8A, 3.9 and 3.10 and 3.10A. Besides this, if you remember safeguard measure, that is also very important. In that, CVD on subsidized article is also very important, and then anti-dumping duty is also very important. This 5 points, which is anti-dumping duty, CVD on subsidized article, safeguard measure, 3.7, 3.8, 3.9, 3.10 is also very important, and this flow is very important for your exam. Other than this also, I've gone ahead and revised everything. I will go ahead and close my revision on types of duties over here. Congratulations. Done.